Let's look at the Australian dollar versus the Great British Pound. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. Let's first, figure out what's happening, more broadly in the market. Huge update for cryptos. Looking at the megatrends, just absolutely huge moves. The thing is that, as I have said, there's a lot of bubbles in this market. That is just something to be aware of and cautious about. The thing is that Forex and other kinds of securities, they can be very beneficial when you are designing a more overall market neutral portfolio. Because if you have a bunch of positions that do not strongly correlate with each other, then even like a monstrous stock market bubble will not be such a huge deal, especially if you have both long and short positions when it comes to stocks. So here is the pair. You can see that there's a 19-ish% move from the lows, which in the Forex market it is big. It is bigger move than the average. And you can see that we're pretty close here to 52-week highs. Let's first look at the seasonality. So you can see that January it is 50-50-ish. However, over February, which is right around the corner, that is literally the strongest month, and so 74% of the time it closes higher than it opened. That's very strong for the Aussie. That's very impressive. Let's just look at the dollar index. So when we look here at the UUP, the ETF, you can see that May and November are super strong. But that's a completely different currency, of course, but it is the number one. Okay, so this is the super giga picture. We look way back here to 1993-ish. And you can see that there's been many different huge major moves. So there's been some clear trends. Clear bullish trend here for the Aussie. And then the Great British Pound, strengthened, which means that the Aussie became weaker. And the pullback here, it is 35%. And that is a very big move in the Forex market because you have all kinds of opportunities to get leverage. So that move could be absolutely huge. And some of the wealthiest investors on the planet, they were, became that wealthy because of Forex trades. There are, of course, many who have become very wealthy because of stock market investing, bond market investing, commodities, you name it. Though when you look at, the biggest names, you always see that they were very skilled in Forex. Okay, so what's happening right here and right now? So when we zoom in here, we see multiple patterns. You could make the case, relatively strong case, I would say. Let's get the brush here to make it visible. That this is an inverse head and shoulders pattern developing, like that. That's a relatively big pattern. It's been developing from 2018 to late 2018 to our current time, so it's a very long-term pattern, and it's relatively clear. It's not that messy. It's almost no textbook. Further, you could make the case that we are forming a micro inverse head and shoulders pattern, shoulder, head, and a tiny shoulder. Okay, so the inverse head and shoulders pattern, it is a bullish pattern. The important thing is not as much the pattern, because talking about head and shoulders and stuff like that, it sounds kind of a bit goofy. It's more about understanding what the underlying mechanism is. So what is happening with the shoulder is that you have bears, dominance, and then the bulls fight back. Then the bears make a big move, then the bulls fight back big. That's what's happening. And then you have the third attempt from the bears here, a pullback, and then it stops. And if you put yourself in the mindset of being a bear, when you see a pullback fail, and then you look back, and the most recent thing you see is that the bulls were very aggressive. they fought back the bears very fiercely after that pullback, then your conviction becomes weaker. And when the bears' conviction get weaker, that's when you get more buyers than sellers, and then you get an uptrend. So that's sort of like the key thing to think about all kinds of patterns, candlesticks. Think about how does the pattern affect the psychology of the investors, because that of course is the most important thing. Anyway, we do see that nice setup, which favors the bulls, given that February, the strongest month, is right around the corner. This is basically the bulls to lose. They have a very nice setup. We could make the case that there are some horizontal resistance levels. So let's draw them in like that, or at least make them a bit more visible. So you can see that if you look at these prior tops, that's a resistance level that we haven't been able to clear through. So that battle, it has been won. There is certainly a resistance level around here. So it becomes a bit of the thing about investing is also, when do you put on your trade or not to? Because it's all about, buying low and selling high. Hence, if you wait until you have all kinds of confirmation to the upside, then you're going to miss out on a lot. The best time to buy was here, during the Great Despair. But if you say like, okay, I want to wait until we see a breakout. But then there's other people who are like, well, I'm actually going to wait until I see a breakout above like these levels, or maybe this one. Then it's very easy to get into this situation of being like the eternal fence sitter. Because there's it's at the peak of despair, that's the best time to buy, and it's also the peak of euphoria, of extreme bullishness, that's the best time to sell. And if you look here at the daily data points, it's been a nice uptrend. There's been multiple pullbacks, so there's no like irrationality here. That's one of the benefits of the forex market. It is more mature. When we look back here, you can see that the entire RSI channel is used up and down, up and down. So you don't have, well, it's rare to have a situation in which we get sort of stuck in the upper end of the range or the lower range. So there's this nice dynamism. Based on that, you could of course make the case, a speculative case, that maybe there's going to be a bit more pullback, which will be a better entry opportunity. Before the hypothetical rally in February, but it's of course very difficult to know whether that is going to happen because the market is forward-looking. Hence, the big professional players here in this pair, they are fully aware of what we saw with February. Let's look at the relationship with the 200-day moving average. So this is something I'm using a bit now as an indicator of the extent to which it is overbought or oversold. The RSI is of course also a very good measure. So they sort of like, they can be used to see whether, I guess basically together they give a more holistic picture of whether it's overbought or oversold. And we did see that we were a bit on the higher end on the RSI on the dailies. Hence, if you look here at the 200-day moving average though, you see that we are here now, and you see that during multiple of the previous rallies, we did actually go higher. Hence, there is fuel left. So there's no like disturbing signs here of excess. Okay, so to sum up my take, I think that if we look at the long-term picture, looking years into the future, I would lean bullish here on the Aussie. Looking at the coming months and weeks, I think that especially due to the very strong seasonality, I would also lean bullish.